Hi, my name is Emily Ward, and I chose week 4, problem 5A. I already did the problem to make sure that I got it correct, and then I couldn't figure out how to erase the cells. So I created my own, but this is basically what the problem looks like. It wants us to read the journal entries, post to trial accounts, and prepare a trial balance. So the problem says that Elena Architects Incorporated has licensed architects on April 1st, 2017. During the month of operations of business, these events and transactions occurred. And then it wants us to journal these events and transactions. So to start the journaling, first we're going to put in the date of April 1st. And then it says for April 1st, stockholders invested $19,980 in cash in exchange for common stocks for the corporation. So for the first line, we're going to put cash. And under debit, we're going to put the $19,980 because we had a debit to the cash, but there was a credit to common stock. So underneath that, we put common stock, and we put that same amount to make it balance for credit. And then we can go to transaction number 2, which was also on April 1st. And it said, on April 1st, they hired a secretary receptionist at a salary of $416 a week, payable monthly. And because that doesn't change our balance, we can just put no entry in the recording section. And because it doesn't change a debit or a credit, we can put 0 in the debit and 0 in the credit. And on April 2nd, it said we paid office rent for the month of $999. So office rent is a rent expense. And so because it's a rent expense, we're going to debit it for $999. And we paid that in cash, where it's going to affect our cash. And so we're going to credit cash $999 so that it still balances. And on April 3rd, we purchased architectural supplies on an account from Birmingham Company for $1,443. And so for the April 3rd, we're going to put supplies because we made a supplies purchase. And because of the purchase, we're going to stick it under debit for $1,443. And that's going to affect our accounts payable, not our cash, because we purchased them on an account, which means we will owe the architectural supplies, we'll owe Birmingham Company for our supplies. So it's going to bring our accounts payable up. It's going to credit accounts payable that same amount so that we can balance. And on April 10th, says we completed blueprints on a carport and billed our clients $2,109 for services. And so we just billed them, so that becomes an accounts receivable. For the debit amount of $2,109. And then we've already done the service. we put it under service revenue and we credit that for $2,109. On April the 11th, it says we received $777 cash advance from M. Jason to design a new home. So that is going to be unearned service revenue. So we're going to put cash, because we received cash, we're going to put it under credit for $777. And we're going to put that for unearned service revenue, because we haven't yet done the service. So because of that, it becomes, oops, I messed up. Did I? So cash is going to be 777. Debit, because we already received the cash, and 777 unearned service revenue, because we haven't done the service. On April 20th, we received $3,108 cash for services that we completed and delivered to S. Melvin. And so on April the 20th, we're going to put in cash. And because this time we did complete those services, they're going to go under our debit. It feels so backwards to me to say debit and credit and debit the way we're doing it here. So what I try to think of it as is when we increase, we put it under debit. When we decrease, we stick it under credit. And I'm not sure if that's thinking about it correctly, but in the book it says that we record an increase in cash as a debit and a decrease in cash as a credit. So I don't know if that helps anybody else, but I highlighted that in my book. So this time it was an increase in cash because we did perform the service, and it was service revenue. And because it was service revenue, we're going to stick it under the credit. And then we go to April 30th. There's 2 transactions for April 30th. And the first transaction says that we paid our secretary receptionist for the month $1,664. And so we're going to put service and wages. We don't have to write the whole thing out. Service and wages. Oh, salaries and wages. Salaries and wages expense would be a debit because our cash is down. And then that would be in cash. Actually, it's going to be a credit here and a debit there. Then April 30th, our last transaction was that we paid Birmingham Company for accounts payable due. And so this one is accounts payable. And so under accounts payable, we're going to put the 333 because we paid them. I think I did have this one right the first time. I apologize. So underneath that, we paid them in cash. Credit the cash. $50. So if we hit submit, it should bring it up and show that we are correct for that. And this is what I have, and I just wanted to check that one at the bottom. Yeah, so salaries and wages, we put it under debit, and then the cash we put under credit. So this is the one I submitted, and I got it back all green, showing that we got it correct. I hope this is helpful for you guys. It was really helpful for me to have to prepare it.